Hello, everyone. I'm Bruce Meyer, editor of Rubber and Plastics News. Welcome to the opening day of the International Silicone Conference, organized by Rubber and Plastics News. Like most other conferences, we're offering this event in a virtual format because of the ongoing COVID-19 pandemic. We're certain you'll enjoy the variety of speakers offered throughout the conference, and I especially want to thank Eric Bishop of Shinitzoo and Greg Dahl of Wacker for putting together a first-rate program. Kicking things off is Kent Furst of Freedonia Group. He has been a mainstay at RPN's past international silicone conferences. Kent has written more than 50 studies since joining Freedonia in 2005. He has been cited in the New York Times, Wall Street Journal, CNBC, and numerous trade publications. He has written such studies as Silicones, World Silicones, World Bioplastics, World Thermoplastic Elastomers, and Fluoropolymers. Today, Kent will be presenting the trends and forecasts for the global silicone market. He will be answering your questions live after the presentation. To submit a question, email rpnevents@crain.com, that's CRAIN.com, at any time during the presentation. Let me now turn the discussion over to Kent Furst.
Thanks, Bruce. And thank you to all the conference organizers who've been working so hard to make this event happen. Good morning, everybody. I'm happy to be kicking off the virtual edition of the International Silicone Conference. My name is Kent Furst. I'm a manager in the industry studies team at the Freedonia Group. And this morning, I'm going to talk about trends in the global silicone market with a focus on the impact of the COVID-19 pandemic. Okay, next slide. So here's an outline of what I'm going to cover here. I'll start with a brief introduction to my company, Freedonia, and our work. The bulk of my talk will be on the economic impact of COVID-19 and what we can expect in the future. I'll discuss the global economy and the US economy before moving into trends in the silicone industry specifically. After that, I'll talk about the forecast in major end-use markets for silicones, and then wrap up with a conclusion and answer some questions that you might have. Next slide. So many of you are probably familiar with Freedonia and our studies on the silicones market. We're an industrial market research firm that's been in business for 35 years. And our customers include many of the world's leading manufacturing companies, including all of the market leaders in the silicones industry. Outside of silicones, we specialize in industries such as construction, packaging, machinery and equipment, and consumer goods. In addition to our experience, some of Freedonia's advantages include our in-house macroeconomics team, our stringent quality control processes, and the detailed company market share that we have in our research. Next slide. So I just want to mention some of the things that Freedonia has done in response to the COVID-19 pandemic this year. So since early March, we've hosted an economic impact tracker, which is a continually updated website with news and information on the COVID impact on a variety of industries. With regards to our research, we realized pretty early on that clients might be uncertain about the value of the forecast that we published prior to the pandemic, since the pandemic had such a big impact on every industry. So what we did was we updated all of our studies from 2019 and early 2020 with an addendum detailing what we think the effect of COVID-19 would be on that industry. For many topics, including silicones, we also published a standalone report on the impact of the pandemic on the various industries that we cover. Since April, however, all the new studies that we've published will have the effect of the COVID-19 pandemic integrated into the forecasts and the analysis. Next slide. Okay, let's get started. So the last time that I spoke at the International Silicone Conference was in early 2018, and needless to say, it's been quite an eventful few years since then. So for the industry, the last time I talked was about how strong of a year 2017 was for the silicones market. But then came 2018, which was the year of supply shocks, which on top of still strong demand led to massive price spikes for silicones. In 2019, everything came back down to earth. Volume flattened out while prices eased back down to earlier levels. And then with 2020 came, well, as the kids say, gestures broadly at everything. So I had to share a screenshot of an email that I received from Sally, one of the conference organizers, back in February, as we were planning for the original in-person conference, which was supposed to be held in May. She asked if I was planning on talking about the coronavirus. And I think my response was something like, well, I'll try to work it in if it seems like if it's of interest. But of course, here we are now. So the coronavirus has gone from I'll try to work it in to the only thing anybody wants to know about. So it will be the main topic of my presentation today. Next slide. So one of the problems with trying to determine the impact of the pandemic is that we know so little about how widespread it's going to be. And this was especially the case early on in the crisis. So I just want to give a snapshot of how much the conventional wisdom about COVID-19 has changed throughout the last 6 to 8 months. And in some cases, our thinking is taking a complete 180. So for example, at the start of the pandemic, the very start of the pandemic, it seemed like the largest impact would be in China, but now China looks like it's going to have the least impact. Similarly, in terms of economic impact, we originally thought that construction would be one of the hardest hit sectors of the economy, but now construction's on track to be one of the latest hit sectors. So, as you can see, it's not just the conventional wisdom from early on in the pandemic that's changed. Even some things that we expected just a few months ago are shifting as the outbreaks ebb and flow. Next slide. So as an example of how the conventional wisdom has changed, here are Fredonia's estimates of GDP growth in 2020 for major global countries and regions. So on the left is our original pre-COVID 2020 forecast from early February. And the other columns are snapshots of GDP growth at different points throughout the pandemic. So you can sort of see at first how the biggest change in the original forecast was in China, but then it was in Western Europe, and then by April and May in the US and the rest of the world also. And by midsummer, the projections in the US, Europe, and Brazil worsened. In late September, the outlook for India declined considerably, while the forecast for China actually improved. In fact, China is now the only major economy expected to see an increase in GDP in 2020. Next slide. So here we have the pandemic's effect on long-term forecasts for global GDP, showing the annual growth rate from 2019 to 2024. So we're expecting that most of the world will have erased the economic losses from the pandemic by 2024, with a positive growth rate for the period as a whole. However, the difference in the pre-pandemic forecast and the current forecast is still significant. Most of the world will see GDP growth reduced by about 1 to 1.5 percentage points per year, which is a pretty considerable drop. So COVID-19 will cause lasting economic damage. Again, China and India are some of the outliers here, with the economic impact in China notably better than the global average, and India will be worse. Next slide. So here are some charts from Oxford Economics, which is another service that we use to help guide our macroeconomic forecasts. These show a few other indicators of economic activity, exports and retail sales. So you can see that the picture is pretty similar for all the countries shown, with major declines in the spring and a rebound in the rest of the year. But again, the details vary by country. China's drop and rebound is earlier than the other countries, and China and a few others have seen exports or retail activity at or rebound to at or above the pre-pandemic level. Next slide. Okay, so let's move on to the US specifically. This chart shows the evolution of our US long-term forecast through 2024 for a variety of macroeconomic indicators. In general, our thoughts on the US economy overall haven't changed too much since April. GDP, personal consumption expenditures, and retail sales have stayed roughly the same. However, our long-term forecasts for construction and light vehicle production have actually improved from what we expected earlier in the year. Next slide. So let's look at the 2020 forecast for some of these sectors in the US. We are forecasting a substantial decline in GDP and personal consumption expenditures in 2020, down about 6 to 7% per year, relative to our original February growth forecast, which was 2% growth this year. Retail sales is expected to hold up a little bit better as more consumer spending has gone towards basic staple items and was boosted by the financial stimulus earlier in the year. Next slide. So manufacturing sectors have generally been hit harder than retail and consumer sectors in the US this year. Manufacturing output overall is expected to fall about 8% in 2020. And motor vehicle production, which tends to be the most volatile during recessions, will drop nearly 20%. As I mentioned before, construction, however, is holding up very well, much better than expected earlier in the year. Construction improvement and repair activity, especially, is forecast to grow in 2020, since many consumers who are stuck at home have decided to spend money on upgrading their living spaces. This is money that might have otherwise been spent on vacations or other recreational activities, which were no longer an option because of the pandemic. I'm sure many of you know exactly what I'm talking about. If you're like me, you've been having trouble finding contractors to do home improvement work because everybody seems to be booked up with projects until like next year. Next slide. Here are some more charts from Oxford Economics focused on the US economy. This one is just a good picture of the overall trajectory of the recession and recovery in 2020, with the sharp decline in the spring and then the gradual rebound from about mid-April onwards. One worrying sign here has been that the recovery index has been in decline since early October, as COVID-19 cases have been hitting record highs in recent weeks. Next slide. This is just a really nice picture of the US recession and recovery also. It might be kind of hard to see the detail here, but it's a week-by-week tracker of the large number of different indicators, from COVID-19 cases to public transit usage, restaurant activity, employment indicators, and so on, in a nice heat map type format. So some interesting things to note here. The mortgage applications line towards the middle had recovered and hit high points even by June, which sort of goes to underscore the strength in the construction sector. The active oil rigs line didn't really start declining until late spring and didn't hit bottom until the summer, probably because these operations didn't have to shut down like other businesses in the spring and may have been hoping for a faster recovery and didn't really shut down until they had to. In general, though, you can see that most indicators have been steadily improving over the summer, and on through the fall. But the ones at the top, new COVID cases, positive test ratio, and ICU utilization rates are worryingly going in the wrong direction. Next slide, please. Okay, let's move on to what this all means for the silicone market. We'll start out by looking at the historical trends in the industry up through 2018. This is a chart of silicone demand in dollar terms going back through 2000. So essentially, the global silicone market has been on a steady growth trajectory over the last couple of decades. The only years in which demand fell were in 2009, in the middle of the Great Recession, and in 2015 and 2016, when price declines were coupled with weak demand in China. The other recent recessions in the last couple decades did not have a substantial effect on silicones globally. Next slide. So now let's add in the years from 2018 to 2023. So first I want to point out that 2018 is an outlier because of the spike in pricing. So the market in dollar terms was much higher than in the preceding years. Demand fell in 2019, but this was still in line with the general kind of long-term growth trend in the market. In 2020, however, we expect that global silicone demand will fall about 8% in dollar terms due to the COVID-19 pandemic. Note that this was a bigger drop than what the market experienced in 2009 during the Great Recession, in which demand declined 5.5% per year, in that year. However, after 2020, we do expect a strong rebound in 2021 and in the following years. Next slide, please. So let's zoom in on those years from 2018 to 2023. So you can see that the decline in silicone demand in 2020 will be steeper than the decline in the overall economy, but the recovery afterwards will also be stronger. In fact, in 2021, we are expecting that the market will recover all of the ground lost during 2020. And also, demand will rise above the industry's 2018 high water mark by 2022 or 2023. So even though the pandemic will hit the industry hard, we are forecasting a strong and full recovery in the following years. Next slide. So now we'll take a closer look at the silicone industry's experience in 2020 going quarter by quarter. These are, of course, generalizations because every company is different markets, different products, but the experience broadly shared by much of the industry. Quarter one, most of which was pre-pandemic, was roughly flat for silicones, was largely a continuation of 2019 when pricing was still weak after the 2018 highs. Companies with exposure to Asia started to feel the effects of the pandemic here because this was, of course, the time that the COVID originated in China. Q2 was the full-on pandemic quarter with lockdowns and business closures in much of the world. The industry saw big double-digit declines in sales. However, most companies continued to operate and many shifted to serving the medical market, which was highest in demand during this time. The third quarter saw the beginnings of a recovery as some of the markets which were hit the hardest in Q2, such as construction and automotive, began to improve. Pricing also started to improve with the recovery in volume demand in this quarter. And in Q4, well, we don't really know yet because we're in the middle of it. Initially, it looked like a continuation of the recovery in Q3, but again, the rising cases in the US and in the rest of the world are going to put that in jeopardy. Next slide, please. Okay, let's move on to a market-by-market discussion of the silicone industry. I need to point out that these charts are different from the ones that you saw before because these show volume demand for silicones and not value. The numbers on the right side of the chart are for the green line, which shows annual change in demand. So for construction, demand will hold up better than most other markets for silicones. As I mentioned earlier, construction improvement and repair activity is rising in many places. But also new construction is starting to pick up, especially in the US, where home sales have been particularly strong. The bad news is in the commercial sector, which is lagging other construction markets significantly. Businesses are obviously rethinking their office footprints in the wake of the pandemic and are not in a great position to make major capital investments after such a rough 2020. Next slide. In the transportation market, we are expecting double-digit declines in silicone demand in 2020. This is on top of a relatively weak 2018 and 2019, as those were years when global motor vehicle production declined. As I mentioned, the worst of it was in the second quarter of the year, while demand picked up a bit in Q3 as assembly plants came back online and consumer spending increased. Overall, however, transportation is still a market with good opportunities for silicones long term, especially for LSR and other specialty silicone materials. Next slide. In electronics, we're expecting 2020 to fare a little bit better than average for silicones overall. Again, we're still talking about declines in the range of 5 to 6%, but again, better than average. So there's still healthy demand for consumer electronics, and businesses have been required to make some IT investments for remote working for their employees and other networking infrastructure, which helps boost the overall electronics industry. Additionally, because much of the industry is based in Asia, it's been a little less affected by the pandemic than businesses in other parts of the world. Overall, electronics is another industry where we see good long-term potential for silicones. Next slide. Personal care markets for silicones are usually pretty steady since consumer goods tend to hold up better during economic downturns. However, we are expecting fairly significant declines in 2020. With so many people working remotely, limiting their social interactions, wearing a mask over their face much of the time, personal care items have become a much lower priority for consumers. The long-term forecast for silicones will also remain relatively weak for many of the same reasons that affected personal care silicones for many years, such as regulatory pressures, material competition, and market maturity. Next slide. Okay, now let's talk about the medical and healthcare market. So it's no surprise that this is the best market for silicones in 2020 and beyond. Medical silicones were already the fastest growing segment prior to 2020, and the pandemic has only made that more true. As we all remember, personal protective equipment and medical devices such as ventilators were in very high demand during the early stages of the pandemic, and many silicone suppliers helped fill the need by producing parts for these items. Going forward, the desperate need for COVID-related medical items has lessened, but ongoing safety measures will continue to drive demand for silicones in medical and healthcare applications. And over the long term, fundamental needs in the medical industry for clean, biocompatible, high-performance materials will provide further opportunities for silicones. Next slide. Finally, I will end with a look at other markets for silicones. As you might expect from such a varied category, it's a bit of a mixed bag. Some markets will be above average in 2020, some below average. Oil and gas markets are way down as drilling activity has declined substantially in the wake of low demand and low prices for oil. For silicone foam stabilizers, demand is being helped by relative strength in the construction market, which has boosted demand for polyurethane foam in items like insulation and furniture. Demand in the machinery market has been hurt by a poor climate for capital investment in items like industrial machinery. And paper and textile applications for silicones have been relatively weak in the face of market maturity and falling demand during the recession. Next slide. Okay, that's all for me. So thank you very much for listening. And as I always like to say, statistics are no substitute for judgment. Numbers are important, but the story behind the numbers is more important. And that's why we always try to give you the why that goes along with the data. So thank you. And I'll turn it over to Bruce, and I'm happy to answer any questions.
All right, thanks, Kent. Just a reminder to everyone, you can still send in your questions. Email those to rpnevents@crane.com, scrolling across your screen at the bottom. Got a few in already, Furst, you give a forecast for what you think the silicone pricing situation will be?
Well, it's very hard to forecast pricing, as we all discovered in 2017 and 2018, 2019, because pricing was so crazy. But pricing is sort of still at kind of low levels at this point, especially with demand being low. So I would expect pricing to continue to firm up over the next year, especially, and continue to kind of increase incrementally after that in the following years. But I guess I would just say that it seems like we're at a relatively low pricing situation now, so there's definitely still room for pricing to firm up and increase over the next couple of years.
Okay. Well, we've had a presidential election that I'm sure everyone knows about, but what they don't know about is what impact do you think that will have on the silicone market?
Well, forecasting politics is about the only thing harder than forecasting economics. But I think that the conventional wisdom seemed to be that if Biden won the presidency, it would increase the chances for a further economic stimulus in response to the recession that's still going on because of the pandemic, and that stimulus, which really did do a lot to kind of drive consumer spending and downstream markets from that earlier in the year, would also help boost economic growth in general and silicones downstream. But I guess that might have been predicated on the Democrats winning the Senate also, but with divided government, with one party in the presidency, one party, a different party in the Senate, then that there still might be some gridlock as to whether another stimulus is going to be passed by the government. So I think it's really going to depend on whether or not that stimulus gets done, I think again, the conventional wisdom for most economists was that it would increase with Biden in the presidency, but there just might be gridlock with divided government.
All right, now we've got kind of a two-part question on the LSR market. One of our viewers would like to know, what is the LSR market forecast? What markets or applications will drive this demand? And also, what regions will drive LSR growth?
Well, LSR is still a premium material. It's still going to do better than silicones overall. I would say in 2020, we still might see a decline just because the overall industry is declining. If we're saying the overall industry is declining 8% a year, then LSR can do a lot better than that and still decline maybe a couple percent this year. Obviously, it's going to depend a lot about the markets and applications. Medical, again, is going to do very well, especially for LSR even in 2020, whereas some of the more conventional applications like your generic automotive electrical connectors, things like that, are more likely to decline just because the overall automotive market is going to drop so much in 2020. So the other question was about regions. LSR is still a material that is heavily focused on US and Europe. So, those are still where a lot of the opportunities are going to be, especially for some of the emerging applications like in LEDs and lighting, in some of the more advanced medical devices, things like that. And it's still starting to penetrate applications in Asia more, but kind of from what you saw in my presentation about GDP growth, economic growth in Asia is still going to be better than in the US, in Europe, especially in China. So to the extent that Asia shifts more towards LSR, there's going to be strong opportunities there.
Somebody else wants to know what you attribute to lower growth rates of silicones in medical healthcare segment earlier in the decade.
It kind of depends on where we're talking about in the decade. It has sort of gone a bit up and down. Like the general trend is towards relatively strong growth, kind of high single-digit growth. It does vary from year to year depending on especially US output of like medical devices and things like that, which has ebbed and flowed a little bit with there was the tax on medical devices that came out of the healthcare legislation earlier in the decade, which had some impact. So it's kind of ebbed and flowed a little bit, but still the kind of overall trend has been toward relatively strong growth compared to other silicone markets, high single digits kind of over the entire span of the decade.
Okay. Here's one. I'm not sure how much of you'll be able to touch on this one, but somebody wants to know about the profitability of silicone companies. I know with some of the pricing and demand situations that had gone on in the last couple of years, this was an issue of whether or not there was enough margins to be made to drive investment.
Right. Yeah. Profitability isn't something that we usually look at in a super amount of detail in our reports, but it does depend a lot on pricing. And with pricing being relatively low right now and demand being low, profitability is going to suffer. I think you see from what I've seen in the reports of the major public silicone companies, their profitability has been down in recent quarters and was obviously down in 2019 compared with 2018, which was a great year because pricing and volumes were both so strong. I don't have a lot of detail about kind of how much profitability, but it's going to depend a lot on how much pricing is going to increase as the recovery goes on.
All right, now we got one final question. You mentioned that this year the silicone market will go down farther than it did during the Great Recession. Do you see the bounce back, the recovery coming quicker?
It's going to be about similar because after the Great Recession, we also saw basically the next year that it was able to make up all the ground that it lost in 2009. And as I mentioned before, in 2021, it looks like we're expecting it to make up all the ground that was lost this year too.
All right, well, that is the questions we have. I want to thank you, as always, Kent, for joining us. Your forecasts are always highly anticipated and, as I said, a big part of our past and this international Silicone conferences and this one as well.
I'm happy to be here, and best of luck with the rest of the new style virtual conference.
Yes, exactly. Well, thanks again. I also want to thank our audience for attending this session of the International Silicone Conference, and also for our sponsors for supporting it. There is a change in the schedule for today's presentations. And for Reinhardt of Shinitsu, who will be giving a global regulatory update, she was originally scheduled for 4 p.m. Eastern this afternoon. Her talk is going to be moved up to 10:30 Eastern this morning. Unfortunately, Robert Kottner will be unavailable to give his presentation, so that's why we have a bit of a scheduling change. Also, if you want to revisit this or any other sessions from the conference, they will be available at Rubber and Plastics News website, rubbernews.com, after the event is completed. Also, don't forget that you can connect with your colleagues here through the virtual networking program, which can be found on the left-hand side of your screen. Simply click on the Meet icon to start connecting with fellow attendees. Thanks again for joining us today.